Joining us now is Tom Lee, Fundstrat head of research. I'm not going to say that that you didn't call this, Tom, because it was the beginning of the year you were talking about. Did you use the word speed bumps or volatility, or I don't know what it was, but you also said that a lot of it could be based on things coming out of Washington, that the market was going to be held hostage to that to some extent. Is this worse than you expected, or pretty much what you were thinking?
Well, and parts of it have been much worse. Like, you know how I think the crypto market has taken it much worse than we expected.
Why?
I think part of it is the crypto industry doesn't have any leverage right now. It sort of delevered in October. And now when we have gold and silver doing so well, especially at the start of the year, that created FOMO, and that was like a vortex sucking all risk appetite towards the precious metals trade. So I think crypto has suffered from that on a price basis at a time when the fundamentals have been good. You know, it's been a contrast. I think the broader economy is actually in good shape. So to me, the turmoil here is kind of what you said. There's a lot of uncertainty because of Washington picking winners and losers, and some of this could be the new Fed pick. But I'm also kind of heartened. I think gold and silver taking a breather is actually a good thing. A
breather? I mean, 80 on silver. That's not breathing yet. It's like I don't know what that is. You do point out that the consensus now is for the GOP to lose the House, and that is not necessarily a negative for the markets for the future because it's already consensus.
Yeah, I think it's consensus. It might actually be a positive surprise if the GOP keeps the House.
If that were to happen.
If that were to happen, but that's a big if. I think one of the things that we're seeing, of course, this year is the White House is deliberately picking more winners and losers early, I think, because of the midterms. In other words, their agenda is front-end loaded. I think that has caused some turmoil in markets.
Even if it was Hassett, or I don't know who the markets would have liked, but you think no matter who it is, that the market tests the new chairman of the Fed when he's announced, or she is announced.
We saw that with Fed Chair Yellen and Fed Chair Powell, that in the early days the market tests them, whether it's their resolve around policy or rates. So I think the confirmation process creates a little uncertainty, and then I think the first FOMC meeting. So I think that's why the middle of the year could be quite bumpy.
Then you point out some things maybe to keep everyone a little bit grounded. Stocks were up the first 5 days of this year. Stocks are up 1% in January this year. Since 1950, that's happened about half, a little bit less, 36 times of 76 years, and the S&P was up 18% on average after a start like that. But I thought you said it. Someone recently said they don't even pay attention. I think it was David Bonds. They don't even pay attention to what happens in January. That indicator doesn't work. It's like the Super Bowl indicator. It's had its time, and you think it does? Historically, this is important.
Yeah, it's very telling. I mean, there's 36 times when it happened just exactly as you described. 33 to 36 times the market was up. The average gain's 18%. If you look at the non-36 instances, the other 34 or so, the market on average is down 5% for the year. So it makes a huge difference to do well in the first week and the first month.
A lot of this, obviously, you know, the giveth and taketh away. AI went almost not like gold and silver, but kind of, I mean, asymptotic in a lot of those stocks, trillions of dollars of valuation. So that's going to be tough. That could be a headwind. Is that just, you know, regresses, or do we use mean regression or reverse?
Yeah, mean reverts, yeah.
Which do you like better? Reverse?
You know, I could see both working.
I know. All right, so that could be a problem. So crypto doesn't have leverage right now. Is it going to go to the levels that you have talked about in the past still, or let's say 75,000 for Bitcoin? Is that a place where people would say, okay, I'm ready to buy, or is 40,000 a place where people say, I'm ready to buy?
Okay. I'm going to say something that it sounds a little contrarian, but Tom DeMark is our advisor at BitMine in terms of crypto. He's been since mid-November saying Bitcoin would go to 77 and Ethereum at 2,400. So he's been waiting for what he calls time and price to align. This weekend, he believes we reached that alignment. So all the pieces are in place for crypto to be bottoming right now because we're getting the level and enough time has passed. So I think as long as crypto fundamentals are good, which is the case, Ethereum active addresses is going parabolic right now and activity. Part of it is, of course, Wall Street is building up digital assets and converging those businesses. If that's the case, then crypto prices should follow.